The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
All right, stock of the day, as we were just saying, an avalanche of earnings coming out today. So we thought we'd focus on Whitehaven Coal. The company has reported 87% drop in net profit after tax to $355 million. Yep, a coal company. It has attributed lower profits to inflationary pressures and lower volumes at its flagship Narrabri mine. Whitehaven will now deliver a dividend of 13 cents a share for the full year. Also announced they'll be selling a 30% stake in the Blackwater mine to Nippon Steel for $1.5 billion. Completion of the deal expected early 25. Whitehaven stock up about 5% on the back of the announcement. Grady, because Whitehaven and New Hope have been cash machines over the last couple of years.
Yeah.
What's this result saying?
Whitehaven was the stock of the year 2 years ago when the energy crisis came along because Russia invaded Ukraine and this energy, all of a sudden we had no energy around Europe. So Whitehaven Coal was the stock of the year 2 years ago. And obviously it's come down since then. I think the results today, they're not too bad. Obviously the market responding very positively, but I think the fact that they're selling that 1/3 of the Blackwater mine is really positive because they owe BHP an extra, I think it's $500 million next year for the final installment in April. And this bolsters up their ability to pay that because investors were questioning how they're going to pay it when obviously profits are dropping, revenues are dropping, production's dropping. So now that really bolsters up their ability to pay it. So they still have some of the mine. It's one of the highest quality mines in Australia. It's one of the top hard coking coal mines in Queensland. I really like the fact that this company has diversification. I know a couple of years ago I got absolutely slammed by a viewer for saying that they're in the dirty coal, thermal coal space, and I got slammed, but it's true. But the world is phasing out dirty thermal coal. And so the fact that Whitehaven has really seen this opportunity with coking coal and metallurgical coal in Queensland, fantastic, great, diversification, that's what we like to see. So they're really going to benefit from that moving forward. So they're going to see, they're able to pay down some debt with this money coming in as well. As I said, bolsters up their balance sheet, and it really expands their operations in Queensland with obviously some credible names coming onto the board now with diversified ownership of the Blackwater mine. So buy rating.
Everyone does their own ESG filter,
Yes.
and we just look at the investment potential because everyone's ESG is different from somebody else's. So you make up your own line. So we just give you investment potential.
Yeah.
The attraction of the coal companies was big dividend payers.
Big dividend payers, but that's obviously come down today.
Exactly.
Yes.
But still attractive?
Still attractive, but I also have a buy on it. And after this result and what they're doing, their diversification, I still genuinely think there's value in the upside for this company.
Okay. Jonathan?
Yeah, so a buy for me as well. So I think I was here maybe a few weeks back when it was trading around mid-9s, and I thought it might break out then. Pullback since then, so obviously the value is still there.
Right.
Now, so just, I forget which coal company released it, but so a couple of years back, coal went up to about $445 a tonne.
Yep.
It's back down to $228 now. So obviously what the report said was basically those 2 years were just an anomaly, and this is more realistic on where we are for the actual value of coal going forward. The mix of coal use around the world, if you look at the whole power grid, it's still 1/3 of use around the world. China's still going to burn it in the future. India's still going to burn it in the future. Japan's still going to burn it in the future. So, still a lot of potential. At these prices, they're still maintaining dividend, which is unlike what Yancoal did. So, obviously, Yancoal, you buy a coal company for dividends, and when you retain the cash to not buy it, not do your job, basically, your share price gets slammed. So great that Whitehaven maintained their dividend. And I think it just shows that there's good management within here. They've managed the lower price in coal and still maintain a dividend. So, still a buy here at these levels.
Okay. So is there, you could see growth in the share and $9.
Yeah, so
you can get back to the $9.
Absolutely. So it's not going to be like a 10 bag or from here. So we're not going to see $400 coal unless there's another sort of crisis.
Yeah.
But even if it just maintains these levels, still being used well in Asia, we can see maybe some more dividend growth in the future after they pay back that debt.
Yeah.
So, still growth potential from here.
Okay. All right. So a buy from both Grady and Jonathan on Whitehaven Coal, which was our stock of the day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.